I wonder what you can tell us with regard to the upper level thematic kind of macro view on just how healthy the U.S. consumer is. We know how critical they are to the U.S. economy.
Yeah, absolutely. Thank you, Don, and thank you for having me on to talk about this data. The Spending Pulse insights show that exactly what you said at the start. It's a consumer that wants to spend, and they want to spend in a way that, they're making the decision. It's their choice in terms of what they're purchasing. And for the month of July, it was a lot about back to school. I mean, feels like the summer's still here. We're going to enjoy the last few weeks, but we do know that school is approaching. We have to gather the supplies. And certainly electronics were a big part of that. We saw an uptick in spending there in the month of July. We had Prime Day promotions in July, July 4th holiday. So we're finding that it's these periods of time that are really prompting consumer spending and consumers to go out and to deploy their purchasing power.
Their purchasing power was deployed somewhat differently before the pandemic, definitely differently during the pandemic, and in a transition phase post-pandemic. Can you take us through what some of those trend shifts are? I know that we, did take out food a lot during the pandemic. We still kind of do some of that. We dine out at restaurants a lot more now. I maybe buck the trend, Michelle, because I take less vacations because travel to those destinations costs so much more compared to other things. What are we doing from an experience standpoint?
So you're absolutely right that those stages is something that we're talking a lot about, where you've gone from a pandemic economy to this like bursting of activity and the reopening to now an economy that is normalizing and finding its equilibrium. And that's what you're seeing in terms of the consumer as well. But that the consumer is reflecting a bit about what they can buy at different stages and where the pent-up demand lies. So in the early stages of the pandemic, in the Spending Pulse data, we saw this extraordinary surge of spending on housing-related items, and we saw quite a lot of stockpiling. In the reopening phase, everything was very strong, but particularly this bounce in experience-led spending. And I think we're still in that environment. If you look at the Spending Pulse restaurant spending, we're running about plus 8% year over year. Now, of course, we are still seeing, that pent-up demand play out, and I think that's driving that. Whereas if you look at grocery spending, we're running at about half of that pace. So, consumers are still changing, they're still adapting, and they're still, in a way, responding to the environment that they've come out of in the last few years. So that balance, that basket of spend is still in an evolution, I think.
Does the data suggest, Michelle, any kind of future? I mean, we think you have a crystal ball with consumer spending, but we know that you don't. But the data is there, and you see a lot of it. Are there indications that we could see things down the line that maybe aren't what we are seeing right now? Is airfare going to come down? Is travel demand slowing down? Are we seeing an uptick more towards goods rather than some of those services? Is there anything you can glean from that?
Well, for that, I would turn back to my, just pure economics hat and think about the drivers of consumer spending. And I think the most important one remains the labor market. So monitoring those monthly jobs reports, understanding the breadth of job creation across different sectors, and looking at what that does for income creation and income growth. So far, the jobs report has been very supportive, right? The last number just south of 200,000 jobs created in the month, the unemployment rate holding at 3.5%, wage growth remaining above normal. So as long as consumers are employed, they feel like they will continue to have their jobs, so they have some sense of security for the future. I think that there will be comfort around spending. But again, spending in a really, kind of thoughtful way around these moments in time where they really, concentrate spending.
All right, and Michelle, before we let you go, only because you opened the door, so I'm going to blame you for this. I'm going to ask you to put your economics hat back on and talk about what your baseline expectations are for the coming quarters and months. A lot's being made of Goldman Sachs's call about rate cuts happening in certain parts of next year, what the baseline effects are from the futures market. What are your expectations for what 2024 ends up looking like?
Look, I think it's an economy that still has a whiles to go in terms of figuring out its steady state, its new steady state. So when you think about the economy this year, the first half of the year, real GDP growth running just above 2% on average, that's an above trend economy. And it's an economy that, despite above trend growth, is still seeing this slowdown and moderation in inflation. So, it's really evolving in a way that is quite encouraging, but it's not done yet. We're not back down to the Fed's target. We're not in a point where we're at, what you would consider NAIRU to be for the unemployment rate either. So that's what I think is going to occur as we look ahead, is that the economy continues to find what that steady state is, and kind of bumps along the way in doing so. So, we'll have to kind of just monitor the data. I think the high frequency data, I think looking at the consumer is obviously really critical in trying to understand that path forward.